Hello and welcome to September's edition of SFI Not So Live with me, Jay Evans, your host. I'm joined by Tony. As always, Tony, nice to see you.
Thank you.
And we've got a full panel again this week. So Holly's back with us. Holly, welcome.
Hello.
Do a little introduction for us before we introduce our guests.
Of course. So I'm Holly. I'm the intermediary support team manager at Saffron, and I look after our telephone-based business development managers and business development assistants. And we are available on the phones, emails, and live chats.
There we go. That's Holly. We all know Holly a little bit. And we've got two guests with us. Bav, do you want to go first? A little introduction, who you are and what you do, please.
Thank you. Hello, I'm Bhavika. I'm the founder of Sci Finance Limited. I do all things mortgages, buy-to-lets, residentials, later life lending, and I also specialise in protection.
Amazing stuff. That's a little hint of what's coming up. And Dave, welcome. A little introduction for you as well, please.
Thank you. My name is Dave Butler, Market Development Manager at Legal & General. My role really to sort of push the protection agenda, working with intermediaries across the board, trying to make sure protection is front of mind and everyone's focus.
Well, that's what we're going to do today. We're going to put it front of mind in the podcast. It's going to be our lead topic for today. Just a few caveats from me that we are here to give our own opinions, not necessarily that of our employers. So some of it is our personal opinions as opposed to the people we work for. And we are recording on the 23rd of August. So if we discuss any rates or information like that, it might be slightly out of date by the time you listen. So that's the rubbish bit out of the way. Let's get started. So let's talk protection. All right, you're going to educate me. We had this conversation just before the podcast. This is something new to me. And actually, Tony, you were saying it's not something that lenders talk very much about.
No, absolutely. It's look from our perspective as lenders, we're looking at the I suppose the credit risk side of lending and making sure we're lending responsibly. But a big part of that is ensuring that someone can stay in the house once they've got the mortgage, and that's what protection's all about. Which is delighted to raise it to the fore today in a subject that we, as you quite rightly said, as lenders don't talk about.
I knew that because I don't know that much about it. So
Exactly.
Luckily we've got two experts who do. But just before we go into it, let's just talk about what protection is. Dave, maybe give us the brokers will know, but the importance maybe of protection, because it's your field of expertise. Just explain why it's so important.
I think obviously if we focus on sort of a mortgage sort of scenario, if you're taking out that mortgage 25-year term, you're committing to 300 mortgage payments over that term. We want to sort of consider, can you keep up those repayments? Can you stay in your home, whatever happens? And sadly, we know Consumer Duty in the FCA sort of tell us that foreseeable harm. People will get sick, people will take time off work, and people will die sort of prematurely. So the consequences of those events may mean that people can't keep their mortgage payments, be able to hit their long-term financial objectives, and protection's there to help support and fill that gap.
So, a bit of an insight, you're the experts, but how many people don't take protection? Is it common that people don't, or do they take the wrong level of protection? Is it something that it needs a bit of education from a consumer perspective? I mean, we're in the middle of a cost of living crisis. We hear about everything else, but we don't really hear much about, the protection on mortgage repayments to save these issues you were just discussing. So, there's education in there, but how many consumers actually, or mortgages, are covered by protection, is what I'm trying to say.
So annual sales in the UK, probably sort of approaching 2 million policies per year, and there will be a lot of sort of rebroking, sort of people sort of changing their levels of cover, the products they've got when they remortgage or when they have a financial review. But not many consumers wake up in the morning with the thought that they want to buy protection, and one of the reasons why sort of I'm intermediary focused is that it's very much need the advice community, be it that sort of mortgage and personal, or even sort of pensions and investment planning, to be able to raise protection and put that on the agenda. Clients don't necessarily understand the risks or put them to the back of their mind. So actually being able to have an honest and frank conversation, say, if you want to achieve these long-term objectives, moving up the property ladder, retiring at a certain time, what are those foreseeable hurdles that might get in the way, and how protection can support you if and when that happens.
But we just mentioned intermediaries. You're a broker, but you say you specialise in protection. So how have you found it to as a broker to kind of push that agenda, as Dave was saying?
So clients are interesting, customers are interesting, right? If they're coming to me, nobody, like Dave said, comes to you saying, I want protection, I want life insurance. That's at the back of their mind. They want that house, they want that home with everything else in it. I think as an advisor, it's up to you to highlight to them the consequences of them not having the protection, and having that conversation at the right time with their agenda, not your agenda. If you explain to them the why, then they'll understand the reason why they need the cover.
Do you find there's some resistance to taking protection? Do you think
Absolutely.
I presume it's down to cost.
Absolutely. You're telling somebody to pay money. They've already committed to a monthly mortgage payment, and that's the only thing they can think about in their mind. But now you're going to try and say to them, you need to pay an additional X, Y, and Z for, for this protection policy. So they are going to resist.
Well, there's obvious outcomes. If you were to fall suddenly ill and you don't have the correct level of protection, and you default on mortgage payments, you are at risk of losing your home. So there's a huge issue here, isn't there, Dave? I mean, it is like, you just mentioned it. The cancer rates are going up. There's people who have fallen long-term sick. Even something as recent as we hear a lot about long COVID and people not being able to go to work. There's things that crop up all the time. You can't prepare for these things. So protection should be front and centre, surely.
Absolutely, but if we think about what we want to achieve in our lives in terms of home ownership, the lifestyles that we want to live, the luxuries, the savings, investments, retirement date, that is always more attractive to a consumer than actually spending that money on that. Until sometimes the events actually happen, people don't necessarily value the benefit that protection can provide. We do lots of research at Legal & General, and we find about the average consumer is only 19 days away from the breadline. So
Wow.
in terms of actually what you would have to support you if your income stopped, you would survive less than 3 weeks before having to borrow money off friends, family, the bank, the credit card.
Wow.
Now, we also find that during before retirement age, lots of statistics sort of coming out, but a 35-year-old has got somewhere between 35-40% chance of being off long-term sick before they retire. And whether they, can then, afford to keep up those mortgage payments or have to change their own sort of financial arrangements to be able to cope and meet their sort of daily needs is why protection is so important and can help sort of fill those gaps.
So we were discussing just before we started the podcast, you had some other stats. I'm going to pick your brains for stats now. You had some stats on ages, and you're saying about, the average age for a life insurance, life insurance payout is very different to that of someone who comes into long-term sick. We're just talking about sickness and illness. Just give the audience a bit of an idea of what that maps out like, because our majority audience are brokers. So, there's much information we can give them or give them more insight on how they can be as expert as Bath.
I think to give a little bit of background on that first, as an industry, we sell much more sort of straight life insurance than we do critical illness cover, and again, more critical illness than we do income protection. Okay. So as an industry, we buy sort of the cheapest products. We have a little bit of life cover in case the worst happens. Mm-hmm. Now, the chances of dying before retirement age will be single figure sort of percentage. And as you say, statistically, the average age of our life cover claims last year was a 70-year-old. Okay. The average age of somebody claiming on a critical illness policy, paying that lump sum to the client, age 48, but the average age for somebody with an income protection claim, only age 41. Potentially, wow. We were saying earlier that not even halfway through their mortgage, but with a young family on board. How do they able to sort of cope, be able to provide even the basics, the essentials in life, rather than the lifestyle that they want to sort of maintain for themselves and their family? And that's what potentially an income protection product. Yes, it would be more expensive than life cover, but could actually pay that client their income all the way up to retirement age.
And I think it's interesting as well, because your first-time buyer, your average age of a first-time buyer is around 33. In London, it's 36. So you're 5 years into your term before you potentially need that cover. It's so interesting. You don't really think about that. You're thinking about the end of life rather than during your life.
And you mentioned education at the sort of the start of the podcast, and who educates people to be able to do this, because I certainly wasn't educated in these sort of products and school, and why it's so important that when we do manage to touch clients, even in other areas of financial planning, that we have prompt around protection, make sure that it is sort of front and centre of that agenda, that people at least understand the consequences of not having it.
That must be important for lenders to do as well, Tony, surely.
Well, yeah, it is. It's all about for us. It's if someone has the means to maintain their mortgage, it means we haven't got to make difficult decisions for them in repossessing their house if they can't, because there's only so long we can go without protecting our own assets. So it's a really important thing. But hey, look, it's back to that Groundhog Day for me around this starts at school and we just don't do it.
We've said this so many times already. There's no financial education in school at the moment. I was talking to my niece and nephews my niece has just finished her GCSEs, got her results, and she knows nothing about finance. Nothing. I mean, she would literally walk in and go get a credit card from the bank and not know the consequences of not being able to pay it back. You know, it's just silly. If her parents hadn't done the education with her, she'd have nothing. And I look back, and I'm in my mid-40s. I look back, and I remember a certain level of education. I certainly walked. I felt like I walked into my A-levels knowing a little bit about finance. I left my A-levels knowing a little bit more. So we do need to. The government really do need to address this, don't they?
No, they do it, but it's a difficult subject, isn't it? Because you're talking about stuff that people don't want to think about. But as I'm sure Bav will come on to in a bit, I think it's a responsibility of, if you're in the knowledge of knowing what can happen, to share that with people who don't. Otherwise, you're not properly dispensing what you can do. It's funny, isn't it? Because I think most people know what life cover is. It's quite straightforward, isn't it? I'm either dead or not.
Yeah.
But it's funny, is when critical illness was invented back in the 80s by first policy was kind of done. I can't remember the insurer, but it was in association with Dr. Christian Barnard, who did the first open heart surgery.
Oh, okay.
And as critical illness, and it was called death cover at that point, wasn't it?
It's dread disease.
Dread disease, that's what it was called.
Dread
so
disease.
not the most sexy name. So that's why it got
appealing.
moved
I'm not
on,
sure I'll pay for that.
but the statement he made around the importance of critical illness is still relevant today, which is medical science is enabling people to live longer, right? So you may not die, but you've died financially if you don't have the cover. And I think that's the key, and that covers the same with income protection, and all of it is really understanding what are you prepared to give up if you don't correctly protect yourself. All of it can be avoided. This is 100% avoidable if you choose and make the right decisions.
So, Bav, as a broker, do you think the broker community could do more? You said you call yourself a protection expert. I think you must know other brokers perhaps are not so concrete in explaining this to the borrower. So do you think the community needs to do more?
I can't talk about other brokers, but I can say that we definitely need to talk about it. And, it is an area, it's a subject that we need to start talking about more as a broker community, because we've got real life customers that we deal with day in, day out. We spoke about the government. The issue that we've got, if you think about the NHS for a second, I volunteer at the stroke unit every week, by the way. So I go in and I help with art and craft, and I see the state of the NHS in there. So, we talk about the NHS is so busy, they've got a lot of backlog, but actually, are we doing anything to help ourselves and help them? Because if we don't have insurance in place, we're just relying on the NHS to do everything for us. That has a domino effect on our care, on what services we're getting back again as well. The broker community does need to talk to their customers, because the worst thing that you can do is not have that conversation, let that mortgage pass through because you're too busy. An advisor or a broker's world is very busy. At the moment, there are a million rate changes happening, so I could be changing rates all day, every day. But if I've not taken time to speak to that customer and that mortgage goes to completion, the dreaded call at some stage will come in. And if you've not taken time to speak to that customer, you don't want to be in that situation to say, I'm sorry, you've got no cover in place. You should have had that conversation. That's your duty. Whether they take it or not, that's up to them. You need to educate them, and you need to not just talk about the simplest cover, i.e. life cover, which is going to pay out in the event of death because of budget or because the premiums are the lowest. You need to explain income protection, because we can all do all these amazing things because we've got an income. The second that income stops, like Dave said, they've got the breadline to deadline calculator that they've got. if you run that calculator with an actual client and, you know, you visually show them this is what's going to happen, it will bring a lot of, you know, awareness, it will. And I think income protection is another classic example, because you talk to them about deferred periods. Deferred period is obviously the time that you wait before you actually make a claim. A lot of times people who don't get sick pay will not have any savings at all. So they'll want that claim to get paid out ASAP. That's telling you they don't have any money. Then how can they not afford to have cover? They need cover. They need it ASAP.
Is it talked about at industry events, Holly, Bav? You know, you broker events or sort of when you're getting together and networking, is it a discussion point? Is it discussed enough?
Yeah, it is. It is. Look, it's you know, I think it is, but the challenge with it is a lot of brokers just don't see the value in it themselves, and therefore don't talk about it. Some who are too busy, even though I would have an argument to say you're never too busy to help somebody like that, but some are, and they will refer their business across, which is great. If somebody else wants to do it, brilliant. But it's the ones that don't have that referral and just choose to ignore it.
Right.
Is what. So I know that providers and networks, particularly this year, I've seen a lot of more focus on protection, because they want to see more percentage covered. Not enough people are leaving with a mortgage with adequate cover. So I know that's a big part of the agenda. It's a consumer duty risk as well, isn't it?
It is, yeah. You'd have thought it.
Foreseeable harm. You know, as an advisor, you can stop that harm. We know 1 in 2 people is going to get cancer in their lifetime. We know the stats for long-term sickness. Your client doesn't, so tell them. Let them you know. I was, as an ex-protection seller myself. That's why I'm passionate about it and delighted we're doing today. It's about, my role is to give you an educated decision to make.
Yeah.
Yeah. Whether you do that, it's up to you. But I know I've discharged my responsibility to make it really clear to you what is going to happen if you choose to ignore stats, life.
I think that brings out a real sort of good sort of couple of points there, that where you know, actually explaining what does happen if you don't have this in place. So rather than just sort of saying during an introduction, you know, this is what protection does, or would you like to have a protection conversation? Even the word protection may not resonate with clients whatsoever.
Yeah, absolutely.
Being able to take clients on a journey to understand what their current situation is, what they might get from their employer, what the state, if anything, will provide, the gaps in their arrangements, and then compare that to what they would want to happen. You can then start talking about products. Say, well, this product fills those gaps, and assess their sort of their attitude to that risk. The other thing that comes up quite well along that sort of consumer duty feeling, but also thinking about your own business and your own brand. If you had 100 clients, mid-30s, 5 or 6 of them are going to die before retirement. Maybe 18 to 20 you might suffer a critical illness, and 35 to 40 are going to be long-term sick. Who are they going to look back on, think about your business, your brand, say, actually, was I made aware? Did I have the right products? And that, you know, just in terms of, you know, doing the job sort of well and having that sort of personal pride that your clients have that protection in place. And then actually further down the line, we have these new sort of requirements of consumer duty to make sure that we're doing this, and we have, you know, the long-term financial objectives of customers at heart, and we are avoiding foreseeable harm. There really, you know, is no reason or no excuse for not talking about sort of protection any longer, but not just asking customers if they want the conversation, actually showing them, taking them on a journey.
You have to force them into it, because no one does anything unless you get to that emotional what's in it for me. So if you don't get to that what's in it for me, no one's ever going to buy it.
Absolutely. And then there are scenarios, scenarios I've been in, and I think, well, actually, if I was in a different situation, I'd have been at Dyer, where I got made redundant, and I literally was 4 months without any work, and I didn't even see that coming. You know, it was not like I had forewarning. It was, you know, month's notice, made redundant, see you later, no cash payout, no argument to have, weren't there long enough. I thought I was in a secure job that I could be in for 10 years, and it, you know, ended up being a 7-month job. You know, these scenarios are real, and it can happen to anybody. And
I mean, Bav and I were chatting. You've got a client that's going through something, so I think it'd be useful just to hear a real live example.
Yeah. So it's a very young couple. I wouldn't take names. I'll call them Annie and NK. So basically, we've got a really young couple that have just completed a purchase application, a mortgage of over 500,000. So Mrs. Was a ex-cancer patient, she was. So by the time we sort of completed everything, she'd passed 1.5 months. There are not a lot of providers who would obviously even consider giving her simple life cover. Critical illness cover and income protection is out of the window. So with the partner, we did the full works. We covered him, we did everything, made sure he was fully protected. But with Annie, all we could get was just simple life cover. Obviously, her being like an ex-cancer patient, the policy was heavily rated. I'm talking about premiums of circa £480 a month, which is quite heavy, it is. So we had a conversation. I obviously shared the figures with her. My recommendation was, obviously you need to protect the whole mortgage, you need to. But this is not about me, this is about the client. So I can say one thing, but the client has got their own circumstances. And so then the client said, look, I can't afford to pay this amount. I'm going to take a quarter of the amount that is required. And that was still a chunky £125 per month. And then she's like, we'll put that cover in place. But she worked for the NHS. That's actually a very interesting point. So we talk about sick pay and employee benefits. So when we had that conversation, she said, Bav, I work for the NHS. They'll give me sick pay. I've got death in service. We put the cover in place. She's fully protected. And then a couple of weeks later, I just finished gym and I was like heading home, and I saw a phone call late in the evening from her, and I thought, oh, it's not like her to give me a call. It should WhatsApp. So I went back home and I returned the call, and the first thing that came out is, Bhavika, the cancer's back again. Oh, no. And can I just check the cover is in place? And no advisor wants that phone call. I was once told you never want to receive that call. And if I could record that call a few times and make everybody listen to it, it was all the worries. Is the cover in place? Now what happens? What happens to the mortgage? I wish I'd taken on more cover. I wish I'd listened. We can't rewind the time back again. But this is a real life customer. And actually, I was speaking to her just yesterday. She's just gone through her second chemo she has. Post-surgery as well. And, when you listen to this customer's stories, these are real live human beings. Had I not had that conversation, knowing she had cancer, then maybe the conversation would be slightly different at the moment. And with cancers and, with the industry evolving so much, for example, I'm not talking about any particular provider, but you've got certain providers who've got insurance covers that pay out multiple times. Cancers can come back over and over again. So you've got, some providers out there who are going to give you insurance covers that will pay out multiple times. Well, that is brilliant, because we don't know how many times the cancer is going to come back again.
It's very true. It's very, very true. I mean, you hear that. There's not many people who knew a story like that would then go, I don't want any protection, or I don't want to live with protection. But it's the conversation, isn't it? And again, I like what you said earlier about not asking whether we have the conversation, start the conversation with them, as an opposed to you want to have the conversation about it. Yeah. Let's have the conversation about it and let's talk about scenarios.
Yeah, all too often you get, well, let's do the mortgage today and then we'll come back to the protection later. No, the mortgage is the easy bit. Keeping you in the house, that's the hard bit. Yeah. That's the tough conversation. That's where we need to start.
And sorry, you can have that conversation, how are you going to stay in this house, whatever happens?
Exactly.
Yeah. It's, and explore that conversation with them. It's not disturbing them. It's sort of having a grown-up conversation to say, are you aware? What risk are you willing to take? What would you like to mitigate? And if there are budgetary concerns, yes, you've got things like the sum assured, the deferred periods, but we have short-term income protection policies. We have family income benefit policies that may pay out, an income over time, as opposed to the big lump sums that may help with those budget scenarios.
And we talk about risks. The risks are printed on every mortgage letter. The repossession risk is very clearly written there. It's telling you, but that is not a picture you want to paint with them. And I think if you've had that conversation, signposted, explained the importance and understood the why and explained the why, then I don't think that is a very difficult conversation to have. It's a very simple conversation to have.
So I mean, just to wrap this up, I think we and the media, trade media, need to do more to raise the awareness of this.
Yeah.
Not only with brokers, but with the general public, as to understanding that stuff happens and you need to be prepared for it.
It isn't talked about, is it?
It
isn't.
it's
We've
not.
had
It's
so
just
much about
not.
the cost of living and all the different elements of the cost of living
Yeah.
crisis that affect people. You don't hear about the importance of having protection, even if we are a little bit short on cash. Paying a little bit of extra money out does make sure that we are covered for
Absolutely.
anything.
I think it's what we were talking about on I think it was 2 podcasts ago when I was on it, and we were talking about the manifestos of each of the parties. As a family and friends, you don't really talk about it until it's the moment it impacts you. And if it's impacting you, it's likely to be too late down the line. So it's everybody in feeling, we're in financial services, we're in the industry, we're more likely to talk about this subject. But yeah, as we said, the general public aren't as much.
And it just seems an additional cost. And when everyone's a bit tight-pursed as it is, and is thinking trying to sell them something extra on top it's not that easy, is it? So that was a nice little close of that one. Topic 1 out the way, guys. That was really good. Thank you, guys. What we'll do, we'll put links under the podcast, put links to both of your LinkedIn accounts, if that's okay. And if any brokers want to ask questions or want to get any more information or want to hunt you up for anything, they can give you a message on
Please
LinkedIn.
do.
So there we go. Contact made. So let's move on to topic number 2. As I don't know how many times we've discussed this, but I just like the fact it came out this week. UK has the slowest housing transaction process across 7 countries. I know we know that's not a shock, is it? Let's face it, we're not that surprised, are we?
I'm going through it now. And
Are
I
you?
know, yeah,
Go on
and I
then,
know
Holly,
it's
tell us
taken a
all
long
about it.
time. So
Tell us
yeah.
all about it. You've read the article, but obviously we are very, very slow. We talk about the fact of the slow uptake on technology. We are a bit antiquated. Everything sort of gets hiccuped along the way. Tell us about your experience you're going through at the moment and how much is dragging out.
Yeah, I'm selling my home at the moment and going through sort of the transaction purchase. I'm moving into rented, so I don't have a further purchase on. But at the same time, it's that it does feel like it takes a while, and it feels like potentially the delays have been, I feel, since 2020, not just on my purchase, which has only just started, but I think the delays within the conveyancing process have really, since COVID hit, and they've never really regained. Searches are taking such a long time. Even your local searches are taking a long period of time as well. So I don't think we ever really recovered from 2020. And I know in one of our previous podcasts, we were talking about the delays in the systems that everybody uses. It's still, as we highlighted, quite antiquated at that point. So yeah, it's. I just think we never recovered from 2020.
No, I agree, and that article's great because it does highlight how you've got the US at one end of the spectrum at 53 days for the average journey, and ours at 180, and then there's others in between. And ours, I mean, from a lending perspective, it's a challenge for us when we're forecasting our performance, because we used to rely on a 3-month window between offer to completion.
Yeah.
It's now 5 months. And growing out in certain places. So actually our performance year kind of ends at the end of July. Because if you're not writing business by then, that's not going to complete before the end of the year. So it really has changed budgeting and forecasting from a lending perspective from ours. And look, I think the article mentions the Digital Property Alliance, which is the the really needed program to drive through digitisation and use big data in the conveyancing process.
Hasn't this been in planning for a decade or more? 2
Yeah.
decades, perhaps?
Yeah, it has. I mean, it's it never ceases to stagger and amaze me how bad it is, not just conveyancing, but actual anything to do with property. You look at planning, and that's the state that's in terms of digitisation. So it just doesn't help. And I think Holly's right. We've never really recovered, and actually there's not many people coming into the conveyancing market
I was gonna
as
say
new
that.
conveyancers, because
Yeah.
everybody's a bit jaded. So you've got lots of people leaving the industry
And nobody coming in.
and no one coming in, and that's the other challenge. If it's that's extinction, isn't it? If you don't
It is,
get,
yeah.
if you don't get something coming in to replace what's there, then it ceases to be relevant. And I think that's where we're heading, and that's why we need to digitise it, because it's all available.
Do you not think that, well, obviously we know it is, how are you going through it? It's just so frustrating for a borrower, a purchaser, to sit and just wait for these months to get through this process.
And I think the longer the chain, that's what, I'm in a very short chain, luckily, but the longer the chain you're in, the more you're reliant on other people, and then it may potentially collapse like lower down the chain or higher up the chain. And then it's stressful. It's just an added stress.
I mean, from a broker
I was
perspective.
about to say, but for a broker perspective, you must have lots.
It's frustrating, it is, I think, for a client, because I think it's the most emotional thing that, first of all, they're ever going to go through. My view is that nobody communicates. We're very good at sending emails. People don't pick up phones. I'm talking about in the conveyancing world. We send this worded emails, we do, but they have got an important job to do. I do understand that. And along with that, I think in the UK, you're not legally bound into anything. So the problem is that somebody will go and put an offer in, and then 4 weeks later, 5 weeks later, they'll decide they don't want to sell the property. We've got one going on right now. We've done a mortgage application, got the mortgage offer out in 2 days. Amazing. And now yesterday, we get a call from the estate agent, and the couple is splitting now, so they don't want to sell the property potentially. But they're not even saying that directly to the person, to my client. They're like, do you want to pull out? No, but help us understand. Do they want to sell the property or do they not? If they want to sell it, then they're going to vacate it. Even if they don't find their onward property, they're going to move into rented accommodation because they want to sell it. But if they don't want to sell it, then tell us they don't want to sell it. You're wasting everybody's time, the lender's time, the advisor's time, everybody's time.
And communication in the industry is pretty poor, isn't it, across the board? I mean, we've had this conversation many times with many experts who work in various different fields, and it is always, we don't communicate.
If you listen to Maria, who's kind of founded the Open Property Data Association, she likens the mortgage industry to, imagine if the airline industry was as disjointed as ours, and every single airline worked off a different planning system for flight scheduling, for luggage. What sort of nightmare we'll be in. We've got standardization across that industry, and there's other industries that have the same standardization. That's what we need, and we actually do have the data now available to do that. It just needs that desire to do it.
Yeah.
That's
and
the key.
Without going back into politics, we've done 3 politics-led podcasts in a row, but are we hearing the right words coming from the new government on this? Because the housing is so high on the agenda, there's so much to sort out. Is there anything they've been saying or they've been doing that gives you optimism?
I remain optimistic, but I'm the eternal pessimist as well, as you'll know, because I've heard it, they're saying it. I'll reserve judgment once I see it and I see the fine print behind it, because it's easy to say, it's not so easy to do. That's the challenge, but if you're committed, they'll do something.
I do think it's the right word. We won't talk too much about the politics side and the house building side, because that comes next month. A little hint for our audience. But right, let's move on, because we are ploughing through our time this morning. So there's something that we can all talk about. Home buyers are looking more at transport links than property size, according to Mortgage Strategy. I really like this article, because I found it really interesting, because we've always talked about land and space and all this kind of stuff, but actually we might be slightly off on what people actually are looking for when they're buying their home. Or not off, but it certainly highlights some of the things. So connectivity is a big one. Transport connectivity. So let's discuss this. Holly, did you have a look at the article?
I did look at the article.
What did you think?
I think for me, it's we had lockdown, we were stuck at home, we couldn't go into the office. Now a lot of businesses are going back to the hybrid working, so you still get the benefit of working from home, but you also go back into the office to do your day-to-day job. So I think people now aren't necessarily worried about being stuck at home. They don't need as much space because they can still go out, but you're now looking at how quickly can I get into the office? How quickly can I, still get home on my commute and things like that. So I think we've just seen the shift in priorities, because we are now going back to working in the office.
Dave?
I guess more looking at it from a personal sort of point of view, and getting in the train in to London twice this week. I came in on Tuesday, actually quite a busy quite a busy train, felt like, pre-pandemic kind of levels. But certain days of the week, today, for example, actually it's dead. And I know that traditionally Fridays would always be quieter, but I see it also in the way that I work, that we're pre-pandemic, I'm a field-based worker, so all over the country, 3-4 days a week. I'll probably spend 2 days out of the house now, and then 2 days doing webinars, doing virtual meetings. So from a work point of view, and the people that I'm engaging with, they're not in their offices as much. Yes, there is absolutely a move, some people going back to work, but the hybrid working, and in turn where people live, the technology that they've got access to, just as important as sort of the postcode these days.
Well, it's funny you should say about the connectivity on that respect. So the broadband and the mobile connectivity, 82% of the home buyers thought that was one of the most important and very important factors when coming in, which I have to agree with, because I've just moved, as people already know, moved from Norfolk to Suffolk, so I'm still rural as ever, but I had really good connectivity in my old house. I'm now living in a pub, and I don't even have a phone signal. So Tony called me the other day. I had to stand in the corner of my living room to get the only bit of signal in the whole town, I think, because I live on a hill. So it is really important. I find it really important.
It is, and actually linking back to me pushing the protection sort of agenda, we do have a lot of our research around sort of that deadline to the breadline, what people would be willing to give up or not give up should their income suddenly stop. Mm-hmm. The thing that people will be least willing to give up or cut back on, their broadband, more important than their heating and lighting, and their mobile phones, more important than actually the food that they'd rather cut back on their food and drink than they would on their mobile phone. So technology for people living this day and age is the number one priority. That's how people are connected, not just through work but socially, and need to be able to maintain their lives.
And there was, as Holly mentioned, the fundamental shift during the pandemic, but actually we have found that that's ingrained in. We're all working differently, we're all connected differently. I think I communicate with people in a different way, especially my family now. I'm living further away. I communicate with them in a very different way to what I did pre-pandemic. I'm more likely to pick up the phone. I'm less likely now. I'm more likely on a video call with them. So, things are changing. But
and the thing is as well, like, it's not just your work and everything, like your television. The majority of people now stream rather than use the Freeview and everything. So you need that connectivity for even just watching the telly too. So technology covers all aspects of your life.
It does. Interesting topic, Bav. Sorry, I just realised we shouted that one, but okay. I find the whole thing fascinating. But what were your visions when you read the article? What did you pick up?
Well, I've got the benefit to obviously see clients buying homes, and connectivity is a big thing. I wouldn't say broadband is a discussion that I have with them when they're looking to buy a home, but definitely commute into work and the best of both worlds. I think they want to be able to work from home if they can. But they also want to be able to go into work and be able to go into work from a train station. That's not going to cost them an arm and a leg.
Yes.
Because it's interesting because they look at stats. Oh, if I buy a home in this location, then it's going to cost me so much. Versus if I live in this location, I can just take a train into such and such a station. So it's very interesting because I think when you're buying a home, the maths and the transport costs play a big part into it.
If I drive 10 miles from my pub to a different train station to one in my hometown, there's a £20 difference in my train fare. Yep. Because I use a different provider. So it gives you an idea of, if you sit and do the maths and think, well, actually, I don't mind that 10-minute drive. It's very little fuel. And I can park there, and the parking all day is £6. Mm-hmm. I calculate that and think, well, I'm better off doing that 10-minute drive. And so if I was to look for a house now, I would be close to that station as opposed to the one in the town. And it is all about weighing up what you want. But
yeah, I mean, and just thinking about it, because we were looking to move and we've decided not to now. We're going to do some more around our place because we just couldn't find the right place. But we were looking to go more rural, as you know. And interestingly, all the particulars on, from the agents all talk about it's got GigaClear broadband and radio, phone signal's bad, so you can't get signal outside of the house. So they are actually signposting it quite early on in the journey now. So actually there's a few where we went, that's no good then.
Yeah.
Because I need a phone signal,
I think it's quite interesting what you see when you're on these Teams calls as well. As a number of people have home offices, so actually they've the spare room that know where they actually plan to work from. But we still see some of our colleagues working on the kitchen table.
Kitchen table, or on the breakfast bar.
And
Whatever,
actually, I guess when people look to move again, is it part of their focus? Is there somewhere for me to work actually, or there's a room to have a garden office or something? All these different
But it
considerations.
was interesting, isn't it? 'Cause the article says that extension or renovation seems to have moved away as well, isn't it?
Yeah.
Everything during lockdown was to do that. Oh, let's create space and do all this. But everybody's now saying it's all about connectivity. I don't mind if the house is smaller. It's not. That's not the driver. It's can I use the broadband?
Yeah,
it's weird, isn't it?
I think in that survey, it was like for the land and the extension element of it, it dropped from 8th to 14th.
14th, yeah.
I was thinking, is that because also the cost of doing any home renovations
It
now
probably
is not
is.
cheap?
Yeah,
It's
it
very
is. It's not cheap.
expensive.
It is.
Labour's not there for it, is it? We've
And
lost the labour
it's-
for it.
it's just a hassle. I'm just going to give you my sob story now. I'm literally wanting to render my house and do some cladding on it. I've got to get planning.
Yeah.
Oh.
Yeah, can't do anything now.
Absolute madness. And 358 quid later to apply for planning just to say, yeah, I'm rendering it is criminal, in my view.
I couldn't disagree.
Anyway, that's enough about me.
So
But,
just to point out some of those stats we were talking about, the square footage of the property is at 72%, which fell from 2nd to 7th. So again, it's like that size doesn't matter. I tried to say that without tongue in cheek. And the potential for, you're right, Holly, it was 8th to 14th, so down to 62%. Interestingly, though, proximity to public spaces and parks is up one place. So again, it's people looking and thinking ahead and thinking about, even if they're first-time buyers, thinking ahead for family, they're probably looking around and going, how close are parks? Have we got open spaces?
That's the thing, and if their square footage or size of their garden isn't that big, as long as they're close to a park, you just move where you're doing things.
Absolutely.
The importance of having a play area for me, because I have a 2.5-year-old, is that's the one thing I was looking at when I was looking for my property is, right, okay, where can I go? What open spaces are there? Oh, I know this area has a really nice park and a really good space, because that's where my focus is now. It isn't, working from home is great, and I work from the office as well, so I do a bit of both. But at weekends, it's the open space, so I can let my very energetic 2.5-year-old run wild, because I need to burn off his energy.
Well, I have to admit, I've seen all these housing estates going up, and where I've just moved from, they're just building houses. I have to say, gardens are not a priority. You've noticed straight away you've got a long strip of rectangular grass and a shed plant at the end. That's the most you're getting nowadays. You don't get the quality gardens you got in old properties, do you, with beautiful character. So
Do you know what the thing that I'm missing from this article or the omission was school catchment.
I did notice that
Not
wasn't mentioned at all.
Because that's got to be
It's a
still
big one.
a primary factor that drives house price, and it definitely does.
definitely does, doesn't
Absolutely
it? Definitely does.
Yeah.
But that's not mentioned at all. Maybe I don't know, but it's just odd.
Maybe it's too obvious, maybe? I don't know. But then you talk about square footage of a house. That's really obvious, isn't it? So, just thought. Interesting point. Right, let's move on. We've got a few more minutes left. So, let's see if we can just quickly go through the last one. And it's just to talk about. We didn't talk about it. We did our rest. I think last podcast we were guessing as to whether we were going to get one, weren't we?
We were.
'Cause it was before.
I was convinced I said it was going down, but I really listened to it and I said it
You
wasn't.
said it wasn't.
So
I was the only one that was
feeling-
teetering on the edge.
I was feeling super smug, and then I was like,
We all got our
damn
crystal.
it.
We get our crystal balls out every time the
Damn
back
it,
of
I
regular
didn't say
beats
it.
and try and
Yeah.
predict it, but we didn't see that coming, did we?
No.
And the effect? Are we seeing? This very much focused on the fact that the high street lenders are dropping rates, but they do that ahead of everyone else anyway.
Look, the base rate dropping and fixed rates dropping, there is a link, but in the context of how fast base interest rates are dropping is not linked to base rate. It's linked
That
to
is a misconception.
a volume war. We're now into another price war for lenders. And it's, it was the big guys first, but I've seen that Leeds today have reduced their rates. We've reduced our rates twice in the last month in particular product areas that are important for us. So it's good to see that. It's kind of linked to base rate, but it's not directly. But swap rates are on the downward curve, and that's an interesting article yesterday linking back to that protection conversation that rates are dropping. So the brokers are redoing deals from 3 months ago, at offer stage, because actually there's, you know, I think you were talking about a £45 difference in what,
£45
for one of your
difference in one of
clients.
the
Now,
clients.
that's £45 that you can now spend on ensuring you can stay in the
improved
house.
protection, yeah,
So
absolutely.
that's
Very
a positive side of this story. But look, it's good for people buying houses because rates are dropping.
Yeah. But they're never going to go back.
No, they're never going to go back to the unicorn days we've had because, saying that, we would, 15 years ago, we have never said we'd been
Well,
in
no,
a
that's true.
zero interest rate environment for 10 years, but look where we got to. But as I keep saying every time, the average base rate since 1830 is 4%. So it's going to be there or thereabouts, that kind of figure.
Have you seen some uptick in business, Hol?
Yeah, I think even with the, we used to see it quite seasonally with the businesses that, school holidays would really impact business levels, but it really hasn't. It's been, it's been steady, and we've been getting interest from all of our different products. And, when this goes out, we'll have already had our fantastic new enhancements to criteria as well. And our standard variable rate will have dropped on the 1st of September too. So we'll have made some more amendments too, and hopefully drive some more business. But yeah, we those seasonal trends we used to see have really changed now. It seems steady across the year.
That's a good sign, surely. Bav, business good for you too?
I can agree to that. It's been a summer where you would think business is going to quieten down, but it's been steady, it's been stable. Obviously, with interest rates changing so much every day, I would say probably a little bit busy as well, which is a good thing. It's not a bad thing. So yeah, the interest rates, I don't necessarily think it's the rates that's driving it. I think people are now used to the rates, and I don't think we should be talking about the rates. The rates are the rates, and my theory is you either pay your own mortgage or you pay somebody else's mortgage. So if you want to buy a home, you might as well get on and do it.
Yeah, I think you're right. There's no point waiting. People have been waiting. We've seen that, and there's still an element of it more on the residential side than buy-to-let.
Yeah, I imagine.
They've kind of got on it is what it is. So
We are where we are.
Get on with
buying.
it.
Yeah.
Residential is now, I think, with the base rate cut, people are going, right, okay, this is the time to do it, And obviously with rates dropping and SVR starting to drop amongst lenders, that helps affordability.
Yeah.
Because a lot of the affordability assessments are based on that underlying SVR or a derivative of. So actually that just makes loans become more affordable, which is good. And we're seeing that because the predominance in the market's been 5-year fixed. Now, that isn't because people want to fix for 5 years. It's because it's the only way they can afford the mortgage. So now we're in a reducing environment. People don't want to fix for 5 years. So we're starting to see that balance seesaw towards 2 year.
Okay.
But the balance with the 2 year is it's assessed on standard variable rate derivative rather than the pay rate at the time. But that's starting to drop. But you're seeing more and more lenders looking at how to help, like we are, how to help clients with that affordability stress rate so that they do get the rate that the recommendation deserves. Not you could do with that, but you can't have it, so you got to have this.
Yeah,
if that makes sense. So that's a good thing. Better outcomes.
And Dave, the buoyancy in the market always helps you guys, I'm sure.
It does. So mortgage intermediaries, the more transactions that are happening, the greater. That said, we do see a proportion of intermediaries, however, who don't always have time. They do it. When mortgages get busier, protection gets put on the back burner. So there are, for some, actually protection volumes or conversion rates at least go up when mortgage times are slower. So interesting thing to tackle, I guess, on your side. Don't envy that. What we will do though is put some links for you guys so that people can get in touch, and certainly the broker audience get in touch and ask your advice, and certainly from your side, Dave, and I'm sure your peers will appreciate hearing from you as well. That's it. We've run out of time.
Gosh,
I've been eyeing the time. We're a little bit over normal, so we've talked more than normal. But hopefully the brokers that have listened have picked up a lot on the protection side, because that's something we haven't discussed before, and I found it very interesting. It's something, a learning curve for me, and something that I can portray outwards. So thank you very much, guys, to Bav, Dave.
Thank you.
And Holly, obviously, good to have you back again.
Thank you.
Let's make this a regular thing, all right?
Yes,
so
please.
whenever Phil has a holiday.
Absolutely.
Nice to have you back on holiday this week.
No, this week after next.
This week. Are you
Yeah.
back for the next podcast, or I have to apologise for you again? No? You're going to be here.
Unfortunately, I'll be
No more
here.
apologies, Tony. Just a reminder, we are recording on the 23rd of August, so some of the information we've given may be slightly out of date. That's it from us for this month. We'll be back in October where I think I'm allowed to say we're going to be talking about self and custom build in a bit more detail. So little hint to look out for us there. Don't forget, if you have enjoyed today, give us a little rating. 5-star would be appreciated on your favourite channel. And do leave us a review because it helps other people to find us. That's it from us, and we'll see you next month. Goodbye.